Rising oil prices, inflation, and arguably an overvalued currency, a heady mix for any central banker to deal with. Joining me now to discuss this is Nigeria's central bank governor, Lamido Sanusi. Thank you so much for joining us. Why are we seeing Nigeria's reserves actually still at quite a low level in terms of foreign currency when oil prices are so high?
Well, the truth is the reserves have been going up since November. We did have attrition in 2010. But what we've had in the last 3 months has been regular accretion. Between January and February, they went up by $700 million. I think what the numbers have shown, the numbers that came out yesterday, we're comparing mid-month to end of the month. And what happens is that we get all the oil revenue and the petroleum profits taxes early in the month and then sell down. So what we do as central bank is compare month end on month end. And between January and February, there has been some accretion.
But, Governor, would it not be safer to put investors' minds at ease to increase those foreign currency reserves even more? Because at the moment, some investors are saying, well, they're worried about the exit of capital or depletion.
Well, we are moving from a history of constant depletion to one where we're getting accretion. And we'll build up the reserves over time. Yes, over time. I mean, you've got, remember that in 2008, 2009, we had huge problems. There was a crash in oil price. There was the Niger Delta crisis. This is an election year, and we've had issues with politicians basically running down the excess crude account. But the government has listened, and there's a new attitude as far as fiscal consolidation is concerned.
In terms of what we've seen over the last couple of months, of course, the price of oil is it's a concern. And actually, when you speak to a lot of OPEC producers, they say we need it to be stable and not to increase too much because volatility is the worst thing. Is this the same case for Nigeria? Or are you concerned that because of this uncertainty, it'll just go up and down and that will make your job that much harder?
I think volatility in any market is not good for the world economy. And I also think for us in Nigeria, unfortunately, because we import a lot of our energy, as you mentioned earlier, we do not get the full benefits of the high oil price because it then translates into the higher cost of petroleum products that we import. The government is subsidizing those products, which then means that you have an increase in government deficit and government spending to subsidize. And so my job gets more difficult managing those things.
So what is the solution, and are we likely to see rate rises to keep inflation under control?
We have said that we are unwinding some of the extraordinary measures we put in place in 2009. In the last MPC, we did tighten. We'll continue to watch. Unfortunately, if inflation is being driven by energy costs or by food prices, that is really structural. And rate rises or tightening will not have a short-term impact. But certainly there is the problem of excessive government spending in an election year. There is liquidity that's coming to the system because of the Asset Management Corporation, and those are reasons for tightening. But whether we will tighten or not in March will depend on what the numbers look like.
But, Governor, how do you make that shift from spending from recurrent to actually capital projects? This is something that you've been an advocate of for many, many times. Is the government finally listening?
The government is listening, but we need to go beyond listening and put in place real policies of structural adjustment. So, for example, instead of subsidizing imported petroleum products, we could subsidize the construction of refineries. And that would be a better medium and long-term solution.
And this is what you're pushing for?
That's what I'm pushing for. And instead of subsidizing the importation of fertilizers, you could actually look at infrastructure of agriculture and the value chain. One of the examples I always give is take our primary produce. 70% of our tomato gets wasted between the farm and the market. Why not invest in logistics, in processing, and move from primary production to processing?
Now, Governor, this January, actually, Nigeria also issued its first international sovereign bond. Are more Nigerian corporate firms going to take advantage of this?
I think those firms that had planned to go would go. I mean, remember, Dangote had been in the market before. Some of the Nigerian banks like GT Bank and First Bank had been to the market to issue bonds. The rates today, given the concerns about fixed income and sovereign debt, seem to me to be a bit steep. The spreads are a bit wide. I think most of the best firms would wait until the spreads tighten a bit.
But at the moment, why is the central bank unable to meet demands for foreign exchange made by lenders? Is this something that you will need to address?
Well, we've got to limit the amount of foreign exchange that we offer to the market. We did say we'd like to keep the Naira at a level of 115 Naira plus or minus 3% just for stability. We have kept in that range for over a year. I think people worry when it gets to 151 or 152, but really that range is up to 154.5, and it's never really pushed the limit. So we're comfortable with the flexibility that we have and the band that we have.
Governor, one very last question. We're going to elections, of course, in your country next month. What's your biggest hope for it?
What's my
biggest hope?
That it will be free and fair, that will have a smooth transition, and that will bring up a government that is going to focus on fiscal consolidation and make my job easier.
Yeah, that's the hope that probably a lot of investors share with you. Governor Sanusi, thank you so much.